Hi, I'm Emilio. I'm a program manager at Google. Right now, lots of people are looking for ways to learn new job skills. That's why we created Google Career Certificates, an online training program for fast-growing fields like IT support, project management, data analytics, user experience design, and more. You don't need any prior experience, and you can be job ready in about 6 months. So put your skills to work. Go to grow.google/certificates.
Support for this podcast comes from Invent Together. I bet you didn't know that inventing activity by Black inventors peaked in 1899, and it has never recovered. Black and Hispanic college graduates patented half the rate of white college graduates. That's just one of the reasons why you need to know about Invent Together. When our patent system gets more diverse, our nation will get stronger and more successful. Find out how you can help diverse inventors and unleash economic opportunity at inventtogether.org.
Welcome to the only daily podcast focusing on compliance news of the day. Each morning, start your day with a cup of coffee and Tom Fox, the voice of compliance, to hear about 4 of the top compliance, corruption, or leadership stories you will need to start your day. The Daily Compliance News is a production of the Compliance Podcast Network.
April 15, 2021, the Farewell to Bernie episode. And we begin with that story from the Wall Street Journal. Bernie Madoff dies at age 82. The disgraced financier ran the largest Ponzi scheme in American history and indeed one of the largest financial frauds ever. He pled guilty in 2009, was given a longest sentence allowed of 125 years. The size and the fraud were elusive. Initial reports indicated $65 billion had been wiped out at Bernard Madoff Investment Securities. The Ponzi scheme was pretty simple: take in money and pay out those who wanted to cash out. What made this even more interesting, certainly from the compliance perspective, was one Harry Markopolos, who figured out something was askance, he couldn't be doing what he was doing, and reported it to the Securities and Exchange Commission under then SEC Chair Christopher Cox. Cox really actually hated the agency he worked or headed, and for whatever reason, the SEC inspectors were able to find nothing based on what Harry Markopolos turned in their alleged interview of Madoff. So a huge black eye for the SEC, one I hope they keep in mind for many years going forward. And Bernie Madoff ruined a lot of lives of a lot of different Americans. Next up, and we continue with an SEC theme as the Washington Post reports Gary Gensler has been confirmed to head the SEC by a vote of 53 to 45. He is a Wall Street critic and anticipated to be an aggressive regulator in the SEC. He's taking the helm of the agency as the Biden administration seeks stricter oversight and enforcement of the financial laws following the degradation under the Trump administration. He's laid out an ambitious agenda, signaling he will push rules forcing companies to disclose matters about climate risks and political spending, and I certainly anticipate enforcement will be up. From the Financial Times comes the story that HSBC will move 4 of its top executives from Hong Kong to London as the bank continues to accelerate its strategic shift to Asia. In an internal memo, the persons were named. HSBC earlier said that it would be likely moving individuals to Hong Kong. No word on the relocation expenses or what these executives think about this, but it certainly doesn't portend HSBC being a major player in Western financial markets, although they will probably be closer to the Chinese financial market. So it's going to be very interesting to see how HSBC fares under its new Chinese overlords. And then finally, who's the $100 billion kid in town? Well, it's Coinbase. As the cryptocurrency exchange Coinbase Global finally went public with a valuation at nearly $100 billion, the company's taking advantage of a surging demand for Bitcoin and other digital currencies. Coinbase shares began trading at $381 and jumped more than 50% from the reference price of $250 a share. The stock even surged higher to nearly $430, although dropping back to $328. That puts Coinbase in with some very high flyers and certainly portends the desire of the U.S. investing public to take a serious look at cryptocurrencies. So hopefully the Fed, the SEC, and the other regulatory bodies will take notice that this is something that the investing appetite, investors have a large appetite for, and that they will move to protect investors going forward. But congrats to Coinbase. The Daily Compliance News is a production of the Compliance Podcast Network and a proud member of C-Suite Radio. Thanks so much for listening. I hope you'll join me again tomorrow.
This podcast is a part of the C-Suite Radio Network. For more top business podcasts, visit c-suiteradio.com.